What's happening, guys? I hope everybody had a fantastic weekend. It is Thanksgiving week. That means we've got Thursday off. We've got Friday as a half day, 1 p.m. close. And this is the week that I always used to look forward to. You know, when I started in college and then all the way up till about 2020, this was the week where we had these crazy runners, these low floats that went nuts, and the market just kind of slowly, inched up higher, and it was as if all the sellers were gone. They're all vacationing or traveling to meet up with family or whatever, and things just kind of ticked higher on lower volume. That said, 2020 happened, and then that just happened every single week. So, we'll see. Anytime that I kind of over-prepare for this week and think we're going to have something crazy, then we end up with nothing out of the norm. So, we'll see what happens, but love being prepared, and hopefully it's similar to this week. I've been talking about how I've been a little bit hands-off. I've been talking about how, patience hasn't been working. I've been talking about all the different things that, I've kind of fumbled, missed a couple trades, overstayed on a few things, and then, every now and then there's that week, right? So I think 3 or 4 weeks ago I had that really powerful week, and then it's just about not pushing too many buttons, not getting too, confident one way or the other, or not carrying a bias one way or the other, and just, showing up as a trader. Without these preconceived kind of thoughts as to what should happen. And then we had last week. Last week was fantastic. Every single day, consistent, a lot of opportunity where, being prepared for the market, does well. Prior to that, the couple weeks before, I could prepare like crazy. And are we going to gap up 500 points or are we going to gap down 500 points? No idea. So it was really more of a trend joining kind of market. And like I said, if you have any bias or anything like that, then you're going to minimize and really underperform towards during that period, which is, exactly what I did personally. But again, last week, back at normal, reactive trades, 9:45, 10 a.m. plus trend joins, nice opportunities off the open, some small caps to pave the way while you let other things kind of work. And it was really, really nice. So anyway, this week, as always, it is Black Friday, Cyber Monday sales. We do not do really any sales. We did one flash sale this year, I think, for 24 hours. And that was it. We just chose to really reinvest in ourselves this year. We put a lot of money towards programming and building out tools that our community uses every single day. That started with price alerts. We've got built-in scanners now, earnings tools. We've got price burst alerts, which has been phenomenal. We just launched that. Max finished that about maybe a couple weeks ago. But finding the volume, finding the action before the headline even hits, or pretty much when the algos read the headline. And then, human takes another, 4, 5, 6, 7 seconds, and then bam, you see the headline. So a lot of times you've seen those burst hit, and then, within 10 seconds, the headline comes out. But all those things are all part of what you get. It's not just, you sign up to be part of the community and looking for somebody to tell you what to do. Obviously, that's not what we're about. But member feedback, anytime they give ideas for different tools they'd like to see and things like that, everything is considered. And a lot of times the benefit of having somebody like Max is he takes an idea and he's like, well, that's a good idea, but this is way better. And it's built off that original idea. And that's kind of the trader mindset and the programmer mindset coming together, and really has created some amazing tools for the room. So feedback's been phenomenal, and hopefully, we continue to launch. Usually we have at least a new feature every month, but lately sometimes it's weekly. So we'll continue to be doing that kind of stuff. So our goal is to create traders that are going to be able to perform in all markets. Not just 2020 and 2021. I mean, pretty much you could do anything, and it would work in those. In that time period. But then flash forward to 2022, and you kind of had to know what you're doing, or you gave back a majority of your gains. It was very easy to compound wealth, and it was even easier to give it all back, right? and faster, way faster. And then, as you guys know, you start to go down that, the hole of trying to get back, and you just keep on digging it deeper and deeper and deeper. So that said, if you're still around, you're still looking to take your trading, potentially to the next level, or at least not be so focused on one style of market, but be able to adapt and trade multiple styles as well as multiple markets, then that's really what we're about. And there's a community at IU of all different traders, and it's not just one style. And so that's why we're able to perform in the majority of markets. There are those days, like I said last week or the week before, where those 2 days I'm just a deer in a headlight. But then there's other guys and ladies that can outperform and get along those days and do exceptionally well, which I personally can learn from. So anyway, this is our year, and this is the time of the year when we do our annual sale. Basically, we gave up with we used to do sales throughout the year and stuff, but we save it all for this week. So we always give away free stuff, and it's not just fluff. We add real value, $1,000 to Centerpoint Securities, as well as some other products that we we use. Sam Turbo, that does our webinars, has hooked us up Trading Sim, given 2 months, and that's going to allow you to rewind it. I always tell people the best way to learn is to record the action in the room as I'm kind of going through the commentary on what I'm thinking. And it's not always about the trade. Sometimes it's about just watching and learning how it unfolds so that you can be better prepared next time. So this particular product allows you to actually replay it with the level 2 and the time and sales, and kind of go back, match up my commentary or potentially an entry. Why did I enter there? What was it that I saw? And you can go back and look, because I know a lot of times people don't record their screens. They always want, somebody else is recording, and, I record my screen every single day. And I would suggest that you do the same thing. You never know what you want to go back and look at or what you could have done better. But I realize that not everybody's going to do that. So this allows you to obviously play it back. Then we've got Tim Grittani's DVDs thrown in there, as well as obviously our own and all that good stuff. So this is the time of year where we try to make it a no-brainer for anybody on the fence. And as you guys know, Sunday videos I never sell. This is the time, the only sale really that we put on each and every single year. So if you've been watching every Sunday, if you've been part of this, if you have been on the fence, you will have your best opportunity, best shot to participate in the community this week. It is our best sale of the year. It is our pretty much only sale of this level of the year. And that's it. So hopefully we'll see you on the other side. Now let's get right into Scan and the stuff for the week ahead. Couple comments that I wanted to go over. T-shirts first off. Randy for me and Fighter Spot TV. You've got the t-shirts for this week. All you have to do, leave a comment, leave a like, and give your key takeaway. Key takeaway with the timestamp so we can go back and review it and potentially make the little mini contents for that. It helps us, helps you. We focus on the stuff that you guys find as beneficial, and I can go back to it and dissect it a little bit more, and hopefully in the end make you a better trader. Topics for this week: I want to talk about wish orders, liquidation plays, transitional days or transition day, and unwinders being back. First off, wish orders. This is probably one of the best weeks for being aware of that. There was a lot of great trades, but if you weren't there, they ended up, grinding back a lot of times. They ended up being choppy, whatever, right? So when you enter a position, or when I always have a general idea of where I want something to potentially go, right? If you're going to risk a dime, you should be looking for 30 cents. If you're going to risk $1, you should be looking for $2 to $3 downside, right? It only makes sense. You shouldn't be looking to risk $1 to make $1. So if that's the case, then it might be worth having orders out there in the event that things flush down. you'll be covered up. And we had a lot of that this week. PRVB was a fantastic trade if you covered. If you overstayed, then, there's a good chance that, maybe you weren't really successful with the trade on Friday. Huge unwind, came all the way back up towards red to green, closed relatively flat, right? So point here is that sometimes when things start to unwind, then you start to get in the mindset of, oh man, we're going. It's going on, it's going down. And then it starts to bounce and you're like, I was just up a lot. I'm going to wait. I'm going to see what it does. As you know, that's famous last words. Then it pulls back a little bit, goes up even higher. And it keeps on doing that. And then all of a sudden you're back to red to green and you just gave up that whole trade. When you enter into the position, you are the least emotional, or you're not tied to that yet. You don't have that P&L, I was just up X. I'm going to hang around. I'm going to wait. So when you are in that trade, it starts to work and it's going in your favor. You should have some wish orders out, anticipating where you thought it was going to go. In the event that it flushes, you're going to be filled. And yes, sometimes I'm like, I wish I didn't cover. And then immediately, 2-3 minutes later, I'm happy that I covered, right? Because it rebounded. And that's what happens is it gets in and it convinces you that you're right. So then you stay in and you want to wait and you want to wait and you want to wait and it bounces back and then you wish you had taken your original idea to begin with. So think about that. It helped me this week a lot of times with DLO, for example, just kind of being there, being part of liquidity, things like that. Liquidation plays, we've talked about those. And a couple of the questions that came in were related to those too, so I will hit upon that. But liquidation plays have been back. There's been that whole cycle of, all those IPOs scared everybody out, and then I don't know if it was SEC or the exchange or whatever, just said no more IPOs, the China low float IPOs. So they haven't been able to do those. So they're going back to the old ones. They're going back to the LGHL, TC, CNEY, SGLY, all these names. If you look back at the daily chart, you can always see if there's been a liquidation day. But I track these. I track, the underwriters. I track the former price action. And then when you start to see that consistent volume come in, you can put 2 and 2 together. It doesn't mean that it's an easy trade. It doesn't mean that it's going to happen. It doesn't mean that it's going to be, on the timetable that you expect. But you can make a reasonable assumption that at some point, when they do pull the bid, there's gonna be no bid, right? And so that's exactly what happened on the ones that you saw, and I tried to give fair warning on those as well. So it's never something to assume that it has to happen because, as you know, a lot of people got smoked on ILAG and all those other ones by getting too confident, not respecting that 420 level that we were talking about in the room where it was soaking, and forcing that trade to be right, And so whenever that happens, that's when, it gets crowded and things start to go the other way. But if liquidation plays, fail, go again, fail, go again and fail, that's different than coming down, soaking, coming down, soaking, coming down, soaking. That's the difference. If you go back and review ILAG and HUDI and all those ones, you'll see that every time it should have cracked, it didn't. It actually absorbed and started to firm up and continue on. Transition day, or like a transitional day is what I call it. Something like Macy's, M, or Lyft, LYFT. They have their earnings day, and you get all excited about this potential trade, but instead it just isn't a channel all day. That's fine. The sooner you recognize that it's in that channel, the more you need to just be like, I'm just going to take a step back and use this information tomorrow or later this week. And so that's what happened with M. M typically picks one direction and just goes. I just know that from history, trading the name. There are particular names that are always choppy, headaches, or just nice, steady, consistent moves. Whether it's up or down, typically it picks a direction and just grinds. So I knew that about the first day on earnings report on Macy's. So it was going, I put a little bit on, it was just slowly but steadily going, and that was it. I just wanted to keep an eye on it. But trade didn't happen that day, so I wanted to focus on it the next day, which was Friday. And obviously, I went for it, trade set up, and nice, steady unwind throughout the day. So understand that sometimes you're going to have that day where it just goes sideways and it's stuck in a channel. But if you try to figure it out, try to fight it, you're going to get exhausted, you're going to forget about it. The sooner you realize it's in that channel, put it on radar the next day. Plot your entry, your exits, ideas, like a price alert. Remind me here. And you'll see that there's a lot of nice, clean action and opportunities, just like Lyft, LYFT, after the earnings report. Don't always try to figure it out on that day because everybody else is trying to figure it out. And then last but not least, I just had a general note that unwinders are back, right? So, the gaps are getting sold, CVNA, things like that. So get familiar with a few names and look for them to push out and fail. A lot of times these stocks that just go straight down always have, morning shove. And once they're met with some sort of resistance, it's a nice and steady unwind. So, that's something that I want to focus on. And then the question sent in from David. Any chance you could explain the difference between failed fall through setup and exhaustion? Can we distinguish them technically on the chart, or do they look similar? So is it just a question of exhaustion equals short, blow off equals failed follow through, no more buys, et cetera, et cetera, et cetera. So a blow off, the difference between, kind of seeing a failed follow through is we've gone over it the last 2 Sundays. So you've seen the setup where it kind of is a channel and it starts to get heavy towards the bottom end of the channel. It flushes, and now whatever that channel was, the support, becomes resistance and it starts to fade off. That's more of the, you can slowly store it in. I like to scale into that trade as long as it doesn't firm back up at that prior resistance point, which was the support before. And so that I would go back the last couple of Sunday scans. I've given examples of exactly what that looks like. Something like an exhaustion move is like DLO on Friday, where you can see it starting to form that channel. I think it was like 1260s or 1270s range as the base, and maybe like 1290s, 13s as kind of the top. And each time it's flirting with a potential fail follow through setup. But the level that I had given in the room was that 1250 level. Once it's under that 1250, then it's possibly going to fade off. But what happens is people get excited and they want to nail it. They want to anticipate the breakdown. And so what happens, it gets crowded and crowded and crowded. And then we had that 1350 blow off. So that's the exhaustion move that I want to look for. So anytime that I'm anticipating something to potentially break down, if it should have died, then in my mind, I say, all right, we need to see some sort of exchange, some sort of blow off move, right? And that blow off move is that exhaustion of everybody that was anticipating it blowing out and moving on. And then you'll start to see that it becomes a lot less crowded and trades a little bit more naturally without the, the swipe ups real fast. So the difference is actually seeing that happen and, the mood kind of change on the name versus something that is just you're joining the trend that has already showed that it's kind of failed at breakouts, it's failed to continue, it's starting to fade off. It's good risk reward. If you're wrong, you stop out. You were maybe risking 1 for the potential of 3, 4, 5, or whatever. So what made me trade GLBL when you stayed out of Huddy? And to me, the same high risk type of trade. What am I missing? Good question. Because yes, it is similar kind of concept. But if you remember, we talked about this cycle. Right? There's a cycle of everybody doing the same thing, then everybody being afraid to do the same thing. So after Huddy, everybody is now afraid again of the next one. And so you got to kind of get a sense of what's going on in the market and how many people are pushing what. And, if Discords and Twitter is all over a potential name and it doesn't really feel too crowded, then there's potential edge there. I think the main thing is I'm not going to trade GLBL and SATX and GRDN or whatever that new one is, Grinder IPO. I'm not going to trade them with crazy size. But if I haven't touched it and it's squeezed out, it's done a bunch of circuit halts, and then you see a big exchange and then it comes in, I'm going to be interested in that trade to a certain degree. And not like back in the day when I would trade, a decent size on it, just because it's just not worth it to me at this stage with that kind of risk. So again, it really comes down to the cycle. What part of that cycle are we in? Are we in the everybody's doing the same thing cycle, or the everybody's afraid to do the same thing? and then how is the price action reacting? And I think that's pretty much the simple answer as to why I chose to trade it that particular time. But again, the thing is, I'm not going to be a hero. I'm not trying to be a hero on these names. So, sometimes your risk is based on the size that you choose to take as well. And so you can always add in like SATX. Fantastic. You guys, I posted on Twitter the entry on SATX off the highs. And then you can start to scale in throughout the day as you get a padding, as it proves each time it ramps up that it's going to fail. Same thing with all the others this week. So GLBL, yeah, it was a great trade. Was I sized up like crazy? No. Did I have room to go $10 plus against me? Yes. So as long as you're good with that, great. Otherwise, just avoid, and it's not good for most people. But relatively small size compared to what I would be trading. Otherwise, these things just take too much attention. They take all your attention, and they don't end up being the huge winners that you would expect. So that's just sort of my way of trading it. But really understanding what part of the cycle you're in my opinion, it's just like all these low floaters. You've got one big low floater, traps, squeezes out, everybody chases the next, works. Everybody loads up the next one because it's been a no-brainer. The last 3 or 4 have been amazing. Slams down, right? What part of the cycle, is everybody doing the same thing? And that's what I want to be aware of. Then we've got another one. Nate, thanks for this. If you have to select just one ticker from pre-market winners or losers in the scan, what criteria, and how do you avoid bear bull traps? So that's the process that you see every single morning. Every single morning at 8:50 a.m., I take 10 or 12 watches and condense it to 1 or 2 main watches. And that's mostly based off of, was I proven right? Did I have a good read on it? Is it doing what I expected? And liquidity. Just because something's working and if it's traded, 1,700 shares, I don't care. But I want high volume, high action, high volatility with liquidity so that I don't have to worry about all these headaches. And I want to be proven right. I could have an idea on scan and be completely dead wrong. It just either gapped down, gapped up, didn't do what I thought, means I don't have a good read on it. So that's fine. Let it set up again until the read is right, and then take the trade. If I'm already being proven right, that's where I want to focus. Last couple, how do you stay confident in a trade while without having tracked data and such? I remember you saying recently you've never tracked data, but you've been around long enough to know, I'm sure. Is it all price action, the fundamentals, combination of all? I don't think that I said I've never tracked data. I don't religiously do it. And the reason for that is because I've got a lot of different strategies and I'm not going to be able to look at this and say, oh, well, then, this trade, worked the X percentage of it's just not the way that I trade. It doesn't really make sense to do that. I have an understanding of what trades have a high probability of working. And that's a lot of fundamental based trades. But other than that, a lot of what I do is momentum in the same setups based off technical action and understanding what kind of market that we're in. So I think I'm a little bit more of maybe a different trader than the systematic approach where I usually shine in volatility unless the market goes straight up like I've discussed. But it's more about having an understanding. I do know what has high probability to work out, but then there's the other side of my trading, which if I try to take the statistics on all of that stuff, it's just going to be a mess. So I would not say that I've never tracked data. I always do check in with TraderView and all that kind of stuff to find out, am I performing well right now? What days do I suck at? What should I stay away from? What levels, a price range am I best at? That's all good information. Last one was when you mentioned a stock being soaked, it might be a good swing trade for the next day. What do you see in the tape? Why is tape reading so hard to master? You're never going to master tape reading. The whole concept is to throw you off, make you think something's happening that's not, right? So sometimes when I try to get a feel or tape read in a real name, real NASDAQ type stuff, I get totally thrown off. Small cap, I feel like I have an edge. If I try to apply that same edge on the real names, then usually you have to trust what you see a lot of times. I have a hard time doing that coming from a small cap kind of background of seeing that kind of stuff. So anyway, I want to see the wicks. We always talk about wicks. Week open gets bought up. Week open gets bought up. And the more times that it fails and gets soaked, it shows that there's a buyer present, but it also kind of creates that longevity because, as you guys know, if it just goes up, 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 the first time it's going to pull back, everybody's going to hit the sell button. So you want them kind of tested, emotionally tested as it's going. They've dunked them out. Try it again. Try it again. And each time that it pulls back and survives, it's building a stronger and stronger base because people are insensitive to the little pullback. So anyway, that's it. Let's get right into scan for the week ahead. All right, guys. So for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut it off. If you're okay and you want to learn what makes a good setup, what makes edge, you're in the right spot. But let's get into it. DLO, huge hit piece, really nice opportunity. First time we've seen in a long time that a hit piece has that secondary unwind. And the confidence came not from the hit piece itself, but after it flushed, when it rallied back. And it was into the 19 range or so, 1850 or so. And that was when the confidence came. It was right over here where it ramped up and it just rejected and it slammed right back down. At that point, that's when I started to scale in. As you guys saw in the room, that's where my confidence grew. And fortunately, finally had a nice unwind that lasts more than just a couple candles before it does the V-shaped recovery. So hopefully that's a sign of the times. There's a lot of people that are afraid of, the next FTX. I'm not saying that that's the next FTX. I'm just saying that there's fear in the market of the bottom dropping out on particular names that have, potential liquidity risk or any questions about any part of their balance sheet just because of what's been going on lately. So that said, DLO, going back to that question we were talking about as far as, a failed follow through setup versus some sort of exhaustion. So for me, I always like to just, it doesn't matter exactly, to the penny, but a general idea of where the absorption is happening, 1260s, and then 13 on the exhaustion, right? However, should have died, saved. Should have died, saved. And then now everybody that was anticipating 1260s failed follow through. Now, failed follow through would be failing at 1260s over and over and over again and then fading off, right? To answer the question that we got earlier. In this case, where everybody's anticipating the 1260s, if they don't cover and all of a sudden it holds and now you've got this consolidation over 13, if it doesn't peak out at 13, what do you think is going to happen? Everybody gets exhausted out. So that to me is a nice clear out. And then we have what you guys should know as the failed follow through setup right over here. And at that point, after the exhaustion move, we had another failed follow through setup, which gives me the confidence for the scale versus the highs, which you saw on my trade on Friday. And we had the nice unwind. So hopefully that answers visually the question that you guys had sent in on Twitter. For Monday, ideally we get the 1350 push again, fades off. Otherwise, I'm thinking 1260s over and under, something like that. Failed follow through as potential. M, nice opportunity. I'd be watching Pops versus VWAP and join that trend. Yeah, I'd like to see it fade all the way back down towards 2120, something like that. But we'll see. This is where I would like to fade it, but I'm not going to carry my bias. If I wake up and it's gapping and there's a good trend and the market's heading higher, I'm obviously going to be wrong. So I have no problem joining that trend. But what am I prepared for? I'm prepared for maybe a morning shove and use this level sort of as sort of an exhaustion level. Other than that, PRVB, fantastic opportunity, sell the news, and came apart. Great covers, great read on that, and then sideways all day. I think a lot of people got excited. They were on the right side. They nailed it. They were able to size in. It was a home run, and then it slowly comes back. I just think that a lot of people were on the same side, and therefore it had to work them out. So I tried to get back in there late day. It didn't turn into anything. I already made the nice trade in the morning. So to me, it's going to be 820, 830 blow off on Monday, and sort of that 8 to, in my opinion, it'll be like 770s or so, where I would probably be patient with it. Until 770s peaks out a few times, I'd want to be proactive with covers on any entries that I take. Other than that, failed follow through, FDMT. This one's a little bit thin. This is one of those where, yes, it's up a lot. Yes, it's gone straight up, but that doesn't mean that it has to pull back. Remember, like TH we saw a long time ago, and there was a few others, but similar kind of move. It consolidates. It actually heads higher. So I just want to be cautious that could be the same sort of situation here, and I don't want to think that it has to pull back. However, if it does have a weak open and it does have a weak day, I do think we can fade, maybe start off at 50 to $1 red and flush another $1.50. That's something I would take advantage of. However, I'm not sitting here thinking, well, it's run up too much, it has to pull back. That's not what I'm thinking at all. SATX, I'll be watching. This one was fantastic. Nice opportunity. I didn't try to get the top. I started short into the failed follow through, and I made it through most of the day. Really nice opportunity. Yeah, it should have been a home run, but again, aligned with my risk and risk profile and what I'm happy to take. I'm not looking to go crazy size on these things, because if it had gone to 100, I wouldn't want that headache. So it was a good trade. I made, $40 a share or whatever it ended up being, but it's not a situation where I want to have crazy size. And I don't even know. I might have done wrong math. 38, 48, 58, 68. Yeah, no, it was. But at any rate, it was a good trade, but it wasn't, some sort of home run. Just because, the same thing I preach. I'm not looking to be a hero on these types of trades. But when it comes into my wheelhouse, when I didn't get bent up on the front side, when everybody else appears to have, when we have a nice exhaustion move, a bunch of volume, and it starts to fail, then I'm interested. And I will always be interested. But on the ones that have high volume, such as Huddy and all that kind of stuff, where it appears super trappy and things are ramping like crazy, I'm not. I would, I missed Huddy for sure. But it was just too much. It had too much that I was afraid to step in front of it and end up in a 200, 300, 500 type of halt. In this case, I hadn't traded as much volume. It was more scarce on the short side than Huddy was. Huddy was pretty easy to borrow. I'm not saying it was easy to borrow, but it was easy to access. And for that's why I waited for the exhaustion move and participated from there. Higher the better on this one though, and we'll see. Ideally, we get a little push towards maybe 50 or something, and then starts to fade off. I could see this basically being red for the next 10 days, $2 to $3. And maybe the short trade would work on a swing, but it's not something that I'll try to get maybe 1 or 2 more days out of it on small trades here and there, just like QRTEB, and a few others. CVNA and XPEV. SI, those are all same sort of situations. I'm looking for morning shoves, confirm versus VWAP, failed fall through for some sort of unwind on those. Continuation side of things, QH. QH has been a nice, it had a nice gap, ramped up. I started in this day over here in the 160s, and I added a little bit, and then it gapped up big, and it failed. Kind of weaker than I would have expected, but I'm going to give it a chance. If it starts to base and firm up and get back over towards 2, great. If not, then I'll probably move on. ARDX, I think a lot of people are very trapped on the short side here. I think there's a catalyst too. I gotta review it. I don't know offhand right now. But the fact that it gapped up, had a bunch of volume, faded off, and you can see we always talk about, you've got this overall kind of intraday base. So you've got all these shorts that felt comfortable. They came in, and why not hold it over? And then it ramps back up the next day. So if we have a weak open, if we start to form a base 190s too, then I'd be cautious. I would love to see this actually. I'm not trying to get too bulled up, but I'd love to see it go 250, 270, 280s, blow everybody out, and then give a nice trade. But we'll see what happens. Otherwise, if we start to have some sort of heaviness, 190s, 180s, then obviously that ship has sailed. PRQR and PBYI. Some nice setups here. Daily, no positions, but I always try to look for some setups that I like that have potential if dips continue to get absorbed. Nothing I want to chase, but if pullbacks hold, just like that Kaba trade. Kaba trade, I was participating. I got involved over here. I got involved over here, and then I minimized the heck out of that trade. It doubled again. But same concept, looking for the move, looking for it to consolidate, and then those wicks where they get soaked up, and continue on. So that's something that I would be looking for on PBYI. If you look back, we're at a very key level. If I can go back, there we go. We're coming up on a very key level. So watch dips, and if it starts to base right over here, 360s, 350s, we can set up for potential for breakout on that. And the same thing, like I said, PRQR. Nothing I would chase, but if 120 starts to form a new base, then we have a potential for that trade. But I think that's about it. That's where I'm focused at. Every day is a new day. I'm not coming to the market thinking that, I'm going to crush it or I'm going to nail this for the full day. We're in a trader's market where if you nail the trade, you've got to take it. And it really comes back to what we've talked about before. Move in, move out, and move on. If you keep on going back to it, like AMC. AMC has been a phenomenal trade, right? Nail the morning, fades off, nail the morning, rips, whatever. But intraday, it starts to just get this nice and steady channel and tightens and tightens and tightens. And for whatever reason, you want to stay, you want to nail it again. But it's best just to move in, move out, move on. So anyway, that's the plan. Again, if you guys are interested, this is the week to join. This is our best sale of the year. It is going to be the only sale of the year besides that flash sale that we did for 24 hours. But that didn't include any bonuses. This year, as you know and as we went over, we put it all out there. And it's the best deal of the year. So if you've been on the fence, now's the time to do it. See you guys in the room on Monday, and if you haven't checked it out, we did put a Tim Grittani interview out on Friday, and we'll link that as well. All right, have a good weekend.